Let's kick it off with a little bit of an introduction. People might be familiar with you because we did do an episode, I think, together a while back. But to kind of recap, um, a little bit about yourself and what have you been up to as of lately here in 2025? What's been on your agenda? What's your main focus this year?
Yeah, appreciate the tee up. Thank you for that. So maybe just yeah, as I've gotten into golf this year as well. But yeah, maybe I'll just a little bit about myself, but we want to talk more about Core. But I'm Brendon. I'm one of the initial contributors at Core, and I currently focus mainly at Core Ventures, which is our strategic investment arm. We've done 18 investments. We mainly back Bitcoin founders that are trying to expand utility on Bitcoin. We'll understand why shortly, and then chip in on institutional BD and a bunch of other special projects as well. I've always kind of been a generalist. Before I was founder CEO of a SaaS company called Joist that I built up over 10 years, sold to Silver Lake, and went public on the NASDAQ a year and a half after that transaction. So have been in tech for about 15 years or so. And then, Core itself is a leading layer one blockchain with the goal of expanding the utility of Bitcoin. We kind of call it the Bitcoin everything chain. So it's a layer one, has its own token Core, and it's got like 100 plus Bitcoin specific DeFi apps. So it's kind of meant to be the home of Bitcoin utility and using Bitcoin on chain. But we have this other part where the chain itself is secured by Bitcoin. So Bitcoin holders can stake Bitcoin to secure the blockchain, and they earn block rewards and transaction fees for doing so. Brings like a native yield to Bitcoin for the first time ever. And what's great is you don't need to give up custody, wrap bridge, or move your Bitcoin. It's always under your private key. It's not slashable, and it's completely secure unless you lose your private key, which I mean we're all worried about anyways. And then the chain's also secured by miners who delegate hash rate. And there's about 75% of the existing Bitcoin miners also secure core chain, and they delegate their hash rate. So that's the TLDR of myself and what we do at Core. And when I go back to the ventures piece, like we're on this mission, we kind of see Core expanding the utility of Bitcoin, right? And having it be a bit more than just what we call pet rock or just sitting in cold wallets. Although it's amazing store of value, we kind of see it, being the underpinning of a whole new financial system and a bunch of other opportunities. And we're here to really accelerate that. So a lot of the investments are focused on people making Bitcoin more useful in a variety of different ways.
Yeah, I want to dive into the venture side of this as well a little bit more because I know you probably work very closely with these founders as well. Some of them know what they're doing, some don't. There's a lot of empowerment and hand holding and teaching as well, whether they're familiar with the space or how to approach it. Like, what do you guys do in terms of like helping them kind of be the best versions of themselves and also build the best startups possible around Bitcoin, around this space? How involved do you guys get as from a venture perspective?
Yeah, it's a good question because I think from the outside, people always probably wonder how involved are investors. So I've had the pleasure of being in both spots, and if you would have said would I do anything VC related, I would have said hell no. Like I was like I'm a founder first foremost, but this is a little different. But I think where we lie and kind of what I learned also in my last business is investors aren't really, they're not going to be there, or the VCs aren't there to tell you how to do everything. They're kind of backing founders that they believe in, and like big products that they believe in, and they're there if you need them. And then kind of the best investors can help those folks level up, but they're not going to go out of their way to like constantly micromanage a founder, right? Because founders are, I mean, you're a founder too with this podcast. Like you don't want someone telling you what to do all the time. So there's really only so much you can do. But what I have found is the best founders are very open with updates on the business. They ask for help. They continuously want to meet, and they try and collect a bunch of feedback from smart people to then kind of form their opinion of what they should do. So when we're there, we'll take the call. We'll do everything we can. Lean on my founder experience, lean on some product expertise, and even bring other people in sometimes to help provide guidance. And then also, if I do see a team really veering off path, whether it's an investor update or I hear something from a partner, I'll be proactive and reach out to them and say, hey, I think you should reconsider this because of but it's ultimately their call. But yeah, I think that probably sums things up pretty well on like how we get involved there. One last thing, because I think this is important, and I forgot this last point, but I think the biggest recurring feedback I'm seeing in Web3 compared to Web2, in Web2 it was like investors push you to move faster. Actually, they give you a bunch of money, and actually, some of the worst pressure from investors was typically to like, you need to move faster, spend this money, do this, and that's why you had like the WeWork blowups and a bunch of different things, right? And then in Web3, I think there's still that pressure, but from us, I'm normally finding myself telling founders to have like this longer term view on things, and it's like, hey, you don't build a business in 3 months, or like all this Twitter, this and that. They kind of want to be somewhere within 6 months of launch, and I'm like, no business is really built like that. And I think there's maybe a few negative signals there, et cetera. So a lot of times I'm telling founders to take a step back, really think about building a long-term business that makes money, and not make these short-term decisions that are going to kind of tank the project a year out. So that's been a recurring theme, and something we're really trying to mentor a lot of different founders on.
Why do you think that is? Is there just a narrative in Web2 that's different from Web3 in terms of when an investor expects to get out of a company, or what kind of creates that mindset where they're like, here's the money, run fast, break something so I can get a paycheck back, is kind of what it feels like for Web2. But if that doesn't necessarily exist in the same way for Web3, I'm just kind of curious maybe what causes that, like, or if you've noticed like a trend in what creates that sentiment.
I didn't expect us going down, but this is a fun topic. I think so. Like the Web 2 thing is just it's hyper competitive. So if you think of like a simple example is Uber Lyft, and then there was like, I don't know, a bunch of other tail end rideshare companies that we never talk about now. It was hella competitive when that space took off, and Uber raised the most money, were the most aggressive, and won and took over a bunch of markets, and that pressure was needed. And I think most businesses and opportunities are like that. We feel it at Core. We were ahead of the curve when it came to Bitcoin scaling, and launching a chain meant to scale the utility of Bitcoin. But now there's a bunch of Bitcoin L2s entering, and a lot of people are seeing this as because it's a huge opportunity. So we need to be on our game and pushing constantly so that we win, right? You always want to win. So coming back to the Web3 thing, I think we still want to push them to win. It's hyper competitive, but I think it's more about I think tokens somewhat of a sticky subject, but most investors are looking to just make quick token returns historically. That is not, and I think founders as well get these tokens almost like your company goes public when you're a Series Seed company, right? You just launched your first product, but you're public, floating in market with a token or something, and that's typically not a good signal for a founder, because you're probably always thinking of that. You're thinking about, whereas in Web 2, your stock's locked up. You don't have a liquidity event for like 10 years, right? You can't even do anything with it. So I think all those forces have pushed a lot of builders to make short-term decisions. They want to build some sort of hype cycle or do a bad deal to get some short-term liquidity on their protocol, and then it goes away in 3 months, and that bump didn't do anything. So I think a lot of what we're saying is, hey, let's not get distracted by these metrics that don't matter, or these hype cycles. It's important to market yourself, and that is a signal in the space. We can't ignore it, but let's really think about, okay, there's a problem. Let's solve a problem first and foremost, and then let's make money. That's like the simplicity of running a startup. Find a problem, solve it, make money on it. And we just try and really bring them back to basics on that, with all of this, kind of distraction that you see on Twitter a lot of times.
For the sake of time, I want to pivot to another topic on Bitcoin that I think will also be very fascinating. Bitcoin started off as money. Like it was a rebuff to the 2008-2009 recession. Satoshi talked about it very clearly in his white paper. Bitcoin was like anti-government, anti-US dollar, the true essence of it was, stemmed from that. And then it quickly over time became a store of value, and people changed the narrative of how they look at Bitcoin in a lot of ways, and it became more of like an asset to them more than something you just go spend. And now today, people are even building shit on Bitcoin, and it's fascinating to me because the whole ecosystem that we have today, with hundreds, if not thousands, of other chains and projects and protocols and networks, layer twos, and is all like an emblem of that not necessarily having being capable on Bitcoin now coming back to Bitcoin. It's amazing to see Bitcoin's development over time. And I think the whole Bitcoin Fi, DeFi on Bitcoin space is very interesting. And I'm curious, because you work with these companies as a venture, as a partner, helping them build. Do you think that this is viable long term? Like, can Bitcoin handle this? Is that kind of a misnomer? Is it a bad case of Maxiism? I don't think there's a right or wrong answer, but I'm curious, like, can Bitcoin sustain this going forward and like really build out an ecosystem around its own chain?
Yeah, a lot of good comments there, and I feel like I'm just gonna, do a bit of a loop here, do a bit of a bunch of loop here because I could hopefully this will all make sense, but I'll just kind of go off the top of my head here. But I think you're right about Bitcoin, and I think what we've learned though is it's maybe not the best money, be, uh, because of the block sizes and cost. Um, and the block, like, it's just not able to settle the transactions that we want, even if we wanted to turn it into a money. And then it's naturally kind of turned into the store of value. But I do think the narrative was co-opted by non-builders who were trying to I'll just kind of leave it at that, right? A lot of the prominent voices, uh, even going back how long, like none of them are builders on Bitcoin. No issue with that necessarily, but I think it did get co-opted a bit as this, you know, store of value narrative, which is fine, but it was not naturally going to kind of get there, but just got magnified a bit maybe by a bunch of different voices, and that became the thing. But initially, even in the white paper, it was meant to do a lot more. There was coming out of the financial crisis, it was meant to be an entire monetary system and currency, and be an alternative to this system that was already in place. And I think what we learned in practice is, okay, Bitcoin, the network itself can't do a lot of these things, but the asset is incredibly valuable and can underpin a lot of these different things. So we went through fork wars. There were debates even about changing Bitcoin. Ultimately, we are where we are, and it's not going to change. So where we land is, the asset is incredible as an incredible store of value and collateral asset, and the network is extremely secure, secured by miners. Let's leave that how it is. Let's find scaling technology that can offer a ton of these great decentralized use cases that bring value back to Bitcoin. So, for example, our approach is we're a sidechain secured by stakers and miners, native yield to Bitcoiners. They're earning money. And then miners get a second subsidy for securing the chain. And then you can actually do things like borrow against your Bitcoin, all these things without gatekeepers and having to go through a bank, or like buy your ETF and borrow on margin on that. And that's the thinking. And then eventually, a lot of these roll ups or transactions will eventually settle on Bitcoin and provide more fees for miners. So that was a lot there, but I think that's a bit about like where we think Bitcoin kind of started, where it went, why we are where we are. And I think there's just a lot of Bitcoin's become so popular in the apex asset by far, over the past couple of years, just in terms of dominance, that it just seems natural to try and use it and build on top of it. And I think a lot of the energy's returned. People wanted to build on Bitcoin for a long time. ETH came out, had all this great new technology. There wasn't really a lot to build on Bitcoin. And I think now people are really coming back home in a sense.
Feels like that, and you feel that sentiment in the market, and it's funny. It's like Bitcoin and stable coins right now. Everything else is kind of like taking a backseat, and Bitcoin's just sucking the market dry. Like the interest is so focused on that. But it's cool to see. It deserves it. Bitcoin has been through a lot. The community's been through a lot. And it needs its time in the light. So it's amazing to see how well it's doing and the level of adoption. Like, it really feels accepted today in society, which is amazing.
It's just like, wow, this is a bit, the setup right now is like a Bitcoiner's dream from like 10 years ago. It's crazy. The game theory has just played out how a lot of these folks said it would. Just amazing to see.
The capitulation of TradFi and government around the world is just incredible. Like, who would ever thought? Everyone's bending the knee to Bitcoin and wants it now. Like, what a weird world that we live in. To start wrapping things up for the episode, tell us what's on the roadmap here for Core going into the rest of 2025. I'm sure there's multiple facets to this answer because I know there's multiple things going on between the chain venture and stuff. But what is important that you think people should keep an eye out for, or any important announcements that maybe you guys have coming up, or just anything in general that's appetizing for people to know?
Right on. Okay, we got the final shill here. Let's go. Yeah, let's go. So we have a lot of exciting things happening at Core. So the one I want to touch on first is I talked about Bitcoin staking. So you can time lock Bitcoin in your Bitcoin wallet for however long you want, a day, 10 days, 6 months, and delegate to a validator on Core and earn block rewards, right? So it brings native yield to Core, or sorry, to Bitcoin for the first time through this hash time locks, right, that are on the Bitcoin network, always under your private key. And we launched dual staking. So if you also stake Core token, you get access to premium yields, which are about 5% right now. So as a Bitcoin holder, you get access to 5% yields on your Bitcoin. So there's been a lot of excitement there from institutions, whales, family offices, funds that want to start earning on their treasuries. And what's cool, the thing that we're excited about is people are starting to build on top of this dual yield, most natively Maple Finance. And they're building this product called LST BTC that you can mint in BitGo and Copper to start, and then other custodians will support it soon too. But it's an LST Bitcoin, like really on the nose, LST BTC, that will rebase in Bitcoin with a 5% ish annual yield. And they're basically tokenizing that trade. They're tapping into our dual staking. So, you bring Bitcoin, they're a lender, so they're going to borrow against it. Although that underlying Bitcoin stays in custody on a very low LTV loan, they're going to go buy Core and then dual stake it and then pass the yield on to the holders. So that's super exciting. They already have 1,300 Bitcoin in the strategy, and there's some big goals ahead for the year, and see that asset coming on chain and earning even more yield. So I think the big thing is once you have a base yield on Bitcoin on chain, that's going to see a lot more Bitcoin flow to chains like Core. So super excited about that. The next is we have announced like quite a while ago that we're, treasury companies are all the rage. These Bitcoin treasury companies, and about 6 months ago or so, we did an announcement that we're actively looking to launch one ourselves, which will be a hybrid of Bitcoin and Core, and be like a treasury that could be put to work and in the dual staking, which I just talked about. So a portion Bitcoin, a portion Core. It's dual staked, and it's actually earning dollars compared to these other treasuries that are kind of just sitting on balance sheet. Although they're all going to be looking for yield soon too. And then on the ecosystem side, we're launching an accelerator. We've got some specific Bitcoin functionality we want built. So me on the venture side, we're running that. I think we're recruiting founders right now. We'll be sharing the ideas pretty soon, but we want people to come in and build some more kick-ass apps. There's already about 100 plus on Core, but we want some specific gaps filled on the chain. So that's going to be really fun for the back half of this year, is seeing those products get built with awesome founders.
Brendon, it's been a pleasure having you on today. Where can people go to connect with you on? Do you shit post on X? Do you have a LinkedIn? At the same time, where can people go check out everything that's going on with Core?
Are you a big shit poster? Yeah. I shit post occasionally, but yeah, I'm active on X at Brendon Sedo, so Brendon with an O, and then Core. You can get us at coredao.org. So again, that's COREDAO.org, and then we also have the same Twitter, coredao_org. Huge following there, and then the Discord's pretty hyped too. So if you're a Discord person, join that. There's a ton of alpha dropping there, but yeah, we're super active. So
awesome, man. We'll put all the links in the description for the episode below when it goes out, so everyone will be able to find everything super quickly and easily. And again, appreciate the conversation. Love diving into Bitcoin and what you guys are doing, the ecosystem. A little bit of founder talk as well. I think some good value and tidbits are to come out of this, make for some good clips.
I know you're on the talk track all day, so I mean, you're specific. You know, you're still recalling all your words. I don't know how you do that for what, probably 10 hours. So thanks for the nicotine coffee combo. Let's go. But yeah, appreciate the time.
Appreciate it, man. We'll talk soon.